Hello everyone, this is Carbonomics. We'll be going over an updated list of the possible investment options to get exposure to carbon credits. This video is going to be about investing in pure play carbon credit companies, meaning that the company doesn't just produce carbon credits on the side and something like timber is their main product. No. The main focus of these companies is on producing or providing exposure to carbon credits. Now before we get started, if you want to learn more about carbon credits or you like the content you see on this channel, don't forget to subscribe so you'll be notified of each new video. So to get started, there are several different terminologies for carbon credits that you should be aware of. And they're sometimes used interchangeably, but they do have slight differences. But all of them do represent 1 ton of carbon dioxide. So first we have carbon offsets, which are a representation of 1 ton of carbon dioxide that was removed from the atmosphere. And this is actually different from a carbon credit, which represents a ton of carbon reduced from being released into the atmosphere. So a carbon offset is created by a project that sucks carbon out of the air, like a reforestation or a direct air capture project. And a carbon credit can be produced by projects like efficient cook stoves, which reduce the amount of emissions into the atmosphere. Third term to remember is carbon allowances, which is a ton of carbon dioxide, similar to a carbon credit, but allowances are specifically created by governments in their national cap and trade schemes. But generally speaking, you'll likely hear people use carbon credits as more of an umbrella term for all of them, but those are some of the official differences. Moving into the possible investment options, there are 5 different groupings we'll be going over. Carbon credit ETFs, carbon royalty companies, carbon credit developers, carbon credit producers, and carbon credit cryptos. So for the first set of stocks, we have ETFs, and there are a decent variety of assets to get exposure to, but most of these offer exposure to compliance market credits or credit allowances. So these ETFs buy up futures contracts from the carbon markets, specifically run by governments for their national mandates. And I'll give a brief description of what these funds target. So the first and largest of the possible ETF options is the KraneShares Global Carbon ETF with the ticker KRBN. This ETF offers exposure to European allowances, California allowances, Regional Greenhouse Gas Initiative allowances, and the UK's allowances. The Regional Greenhouse Gas Initiative is specifically the Northeast American Emissions Trading Scheme. And this ETF certainly has the most diversification of everything on this list. So I'm grouping KEUA and KCCA kind of in the same boat here. KEUA is the KraneShares European Carbon Allowance Strategy ETF, and KCCA is the KraneShares California Carbon Allowance ETF. And the main difference really between the two is that KEUA offers pure exposure to European allowances, while the KCCA offers sole exposure to Californian allowances specifically. Moving on here, the Carbon Strategy ETF with the ticker KRB is a new ETF launched in part by Carbon Streaming, which is a royalty company that will be mentioned later on in the video. The ETF will start out with positions in the European allowances, Californian allowances, and the Regional Greenhouse Gas Initiative allowances. Next up is the iPath Series B Carbon ETN, which as you can see from the title is actually an ETN and not an ETF. I'll not be getting into the differences between ETFs and ETNs, but just understand that these aren't necessarily the same thing. The stock uses debt to provide exposure to European Union allowances. There's a small amount of exposure to the Kyoto Protocol's Clean Development Index, but the vast majority is from the EU for this offering here. This is the SparkChange Physical Carbon EUA ETC, which is definitely one of the most unique options here. Like many of the other options, this stock offers exposure to European allowances, but this is actually an exchange-traded commodity, or ETC, meaning every share you buy is physically backed by carbon allowances, so not just buying futures contracts. So SparkChange is going out and buying allowances outright. Unfortunately, the ETC is listed on the London Stock Exchange primarily, So this may be difficult for access for some investors. Um, if you really want to buy into this, then swapping brokerages over to something like Interactive Brokers is probably your best bet for international trading. So I'd look into them. Personally, I use Fidelity, which offers some pretty good international access as well if you're in the US. Anyways, moving on to the last possible option for investing in ETFs, we have the KraneShares Global Carbon Offset Strategy ETF, or KSET. This is another unique option as the ETF is the only one that actually provides exposure to the voluntary carbon markets, meaning this ETF is actually buying futures on carbon credits created by carbon projects, not governments. Um, so this is for carbon offsets or credits, so not carbon allowances. Now for the next group of companies, we have the carbon credit royalty companies. So what are royalty and streaming companies for a brief overview? Well, these companies provide an upfront cash investment to a carbon credit producing project in exchange for a certain percentage of the revenues or credits from that project. So this business model provides less risk because they don't need to build the projects themselves or hire all the labor necessary to maintain them. And as we start going over the investable companies here, you'll notice that many of their market caps have actually been decimated over the past year. In my opinion, keep in mind this is not financial advice, but my opinion is that we're going to be approaching very interesting buying opportunities, over the next few years. The energy crisis temporarily brings the global community's focus off of the ESG narrative, right? So right now might be one of the best times to, at least start building up a watch list of companies that you'd be interested in buying a piece of. But this is the first royalty company on the list, Base Carbon. Now, full disclosure, while I'm not currently a shareholder of the company, I do plan on buying shares in the company in the near future. With that said, this company was spun out of Abaxx Technologies, which I am a shareholder of. But Base Carbon has a market cap of 43 million American. And if you'd like to see my full analysis of Base Carbon, that's in a separate video, and I'll link that in the description below. The second royalty company is the largest in the space as well. We have Carbon Streaming Corporation. In the US, the company trades for around 112 million as I'm making this video. And earlier this year, the company was trading actually around 5 to 600 million USD. And some of that drop is justified, some of it not. But if you want to see my full analysis on carbon streaming, I'll link that video in the description as well. So this is the last public royalty company in this group, Star Royalties. Now, Star Royalties is actually mainly a gold royalty company, but they have a subsidiary called Green Star Royalties, which is working on the carbon credit side of their business. Management has discussed spinning out this side of the business into its own company, but we've yet to see them fully announce that move quite yet. Something unique about the company itself is that it focuses on funding projects in proven jurisdictions. So they focus specifically on Canadian and American markets, as their other business counterparts do not. But Star currently trades at nearly a 23 million market cap American. So outside of ETFs and royalty companies, the investment options for pure play carbon credit companies start to get quite slim. But now we're going to discuss carbon developers. So these are companies that are actually in the process of building out carbon credit producing projects, but they've not yet started to generate credits. First on the list being the larger of the two, Aker Carbon Capture. Aker Carbon Capture currently trades at a 757 million market cap in USD. They do have revenues from project milestones and testing facilities, but their large projects are not fully developed yet. The first of which is their Twence carbon capture facility, which looks to be set for the first production of credits at the end of 2023. And the other carbon credit developer is ClimateX, which is a significantly smaller company than Aker. ClimateX will be specifically producing credits in the voluntary carbon markets, but all their projects are currently in the feasibility stage, so they have a long ways to go before actually producing any credits. ClimateX was recently listed in July and it's trading around a 9 million market cap Canadian. So this is definitely the smallest company on the list. But I have made a video about this company recently, so if you want to see that, link will be in the description. Now let's move on to the carbon capture companies that are already producing credits. There's only one pure play carbon credit producer, or carbon capture company, and it's certainly not easy to invest in either, but that is EKI Energy. This is an Indian company, which is pretty notorious for being difficult for foreign investors to invest in specifically. But anyways, the company trades at a 13 billion market cap USD, and they actually have over 1,000 different projects. So they're by far the largest publicly traded company that's in the carbon credit ecosystem. Here's a list of the carbon credit cryptos. There's a good amount of them out there. And I'm kind of going to dive into why I'm not invested in any of them or plan on doing so a little bit here. While carbon credit cryptos are the first way for the average investor to buy individual carbon credits themselves, they certainly have some issues. And I'll link a video in the description by Elias Ayre, which kind of goes over why carbon credit cryptos can be questionable. But I'll kind of summarize some of his points here. The main issue with tokenized credits like these is that for fungibility or the ability to interchangeably trade these credits like a currency, which is kind of the goal of crypto. It's kind of assumed that all these credits are worth a certain amount, which is certainly not true. The value of the credit changes by project, verification year, and a variety of other factors. And like some of these crypto projects might be doing, if you actually tie these carbon credits to NFTs instead, then you kind of run into some different issues there. An NFT would allow you to tie that credit to a specific area of the project, and that kind of brings up additional risks, of what might happen when a forest catches on fire, or that carbon's released back into the atmosphere. What kind of happens to that credit then? And even so, not all these credits are worth the same amount, unless they're all sourcing them from one specific project. There's a bunch of different problems that need to be addressed in the space. It's not necessarily a reason to give up on crypto entirely, but there's certainly issues that you should be made aware of, before buying into these crypto projects. Well, everyone, that's going to be the end of the video here. If you did like it, don't forget to like, comment, and subscribe. And thanks for watching.